Hey, this is Chris from StockSpot, and a question a lot of first-time investors are sending to us at the moment is it too late to start investing now with the market up 11 months in a row? Now, it's true that this doesn't happen very often. In fact, it's only ever happened once before in history, and so it's pretty uncommon for the market to have such a great stretch. It's actually returned about 28% over the last 12 months, which is a good return, but actually if you sort of zoom your focus out a little further, what you can see is over the period of 2007 to 2020, our market actually went nowhere. It had some dividends, but the capital returns were non-existent. So actually for that period of time, had you invested in the Aussie share market, you wouldn't have had a great return at all. And what tends to happen over periods of time where markets go nowhere is that there is sort of a pent-up energy, so that when markets do eventually take out their highs, and our market did take out its highs a couple of years ago, they tend to bust on upwards. And that's what we're seeing at the moment, in combination with there being a lot of private savings, government support, for businesses after COVID, as well as an environment of low interest rates. All of these are really positive for investing, and what we're seeing is a lot of money getting deployed into markets, and it's very supportive of the Aussie share market. Now, the question still stands, is it the right time to be investing now, or should I be waiting for a market pullback? And that's a very hard question to answer, because historically, there are often market pullbacks of 5 or 10%, but the problem is timing these pullbacks is very difficult. The reality is that the market may be 10 or 15 or 20% higher before there's a meaningful pullback. So even if there is a pullback eventually, it only may pull back to a level that's higher than it is today. And so waiting to invest is a dangerous strategy as well, and you may not end up better off than you would have been if you just started investing today. The difficult thing about waiting is that you need to decide when you eventually are going to buy. And so you have to decide, am I waiting for a 5% fall, 10%, 15 or 20? Now, any of these could happen, but knowing what it's going to be is very difficult. So the strategy that we suggest at StockSpot is, rather than trying to get your timing right and perfectly work out the right time to invest, just get started today and dollar cost average, or invest a small amount gradually over a period of usually between 3 to 12 months is what we suggest. And the reason for this strategy is really to do one thing mainly, and that is to minimize the regret that you feel irrespective of whether markets go up or down. And the way that this works is that if you buy a little bit today and the market rises, at least you'll feel happy that you bought some already, even though you're buying the next amounts higher. And conversely, if you buy a little bit today and the market falls, you'll be happy that you can buy more at the lower prices later. So getting started actually is a good strategy to minimize the risk of a big market fall straight after you invest, because you actually get to take advantage of it if it happens. And that's why I would suggest not trying to time when the market pulls back, although it's unlikely to have month after month after month going forward of positive returns. Knowing exactly when to get in is going to be tricky, so you might as well get started and try and space out that investment over a period of time to de-risk your entry point and to minimize your regret.